Robinhood just announced that they are bringing equities on-chain in the EU, and they are building on Arbitrum, the announcement being made in one of the most lavish events you're ever going to see in the crypto ecosystem out there at Cannes or Cannes. Honestly, I'm not entirely sure, but a huge win for Ethereum and Arbitrum, and we will see if it's also a huge win for Robinhood. Excited to dig into the details of the deal with none other than the co-founder of Off-Chain Labs, Steven Goldfeder, joining us on Coinage again. All right, back with us on Coinage, the co-founder of Off-Chain Labs and CEO, Steven Goldfeder. Thanks for coming back on. I gotta say congrats, I think, to start this one, because everyone's asking. The Robinhood announcement, so huge. Arbitrum landed a big one here. What went into this one? Everyone's trying to figure out how this happened. How you kept it under wraps as well, by the way. So I'll give you the first go here. How big is this for you guys?
Well, it's great to be here. Thank you for having me. And yeah, great to be back. This is definitely a very big one. And it's a big one for us and everyone in the Arbitrum ecosystem. It's a big one for Ethereum. Having Robinhood building on Arbitrum also means Robinhood is building on Ethereum. And actually, it's a big one for crypto generally, because what Robinhood is doing on the blockchain is so much deeper than what we've seen before from, I think, really just about any other fintech or financial institution of its size. It's so deep and integrated and embedded in the blockchain that it's really a 0 to 1 moment for crypto. Like, this is the crypto dream that I got excited about, a decade plus ago when I saw smart contracts. And I wasn't thinking back then, like, hey, what new things can we build with crypto, which are, by the way, very interesting. I was thinking, I think that crypto can actually rebuild, smart contracts can rebuild and replace a lot of the current systems that we have. And this is a perfect example of what we're actually seeing playing out today.
Yeah, I think you were tweeting recently that it's not going to be blockchains themselves that kind of scale to 1 billion users, but kind of forward-facing, maybe consumer-facing products like a Robinhood that already exists that can just start to build on-chain. And I think that's why this one's so huge. But I guess in terms of landing it, a lot of people are kind of asking what goes into a deal like this, because we've seen, from other exchanges, the idea of them spinning up their own chain seems relatively kind of the status quo. At least I think Kraken has kind of done that, OKX as well. I mean, kind of describe what goes into a deal like this, how you guys want it, if you can, in terms of Robinhood launching, as we were just chatting before we started the recording, kind of launching this in a way that is tokenizing stocks and also kind of natively building their own thing rather than just kind of launching a sandbox on a layer 2.
Yeah, so in terms of what goes into something like this, the first thing that goes in is building a really good product and building the technology that can actually support something of the scale of Robinhood. And that's something which is, you need to do from a technology scale perspective, from a security perspective, and actually have the core, robust, and mature technology that can build it. So that's the bedrock of everything we've done, and something we've done for many years. And of course, the Arbitrum technology has been in production, battle tested for years, and is ready for this new phase of its maturity. And also, it's frankly, a lot of it is, building trust with the ecosystem and trust with the people over time. This is not the first partnership between the Arbitrum ecosystem and Robinhood. Robinhood, going back, I think it was ETH Denver 2 years ago, Robinhood and Arbitrum did an announcement in which Robinhood was giving access to Arbitrum DeFi through the Robinhood crypto app. And this was a natural evolution as things develop over time, and the two ecosystems mature, and Robinhood was ready to expand and do more with crypto. I think it was a very natural partnership, and we got to know each other over a long period of time. And I only have the absolute best things to say about their team and how forward-thinking they are. And I think on our side, we've been a good partner as well.
Well, one of the big questions too, that's always interesting, and I think this is a big one for the ETH ecosystem as a whole, as you said. But I wanted to ask you a little bit about the numbers in terms of kind of sizing the prize in what Robinhood now brings to the table, because tokenizing stocks in the EU and kind of as they have expansion plans, I'm kind of curious, as you think about things on Arbitrum, what kind of the average retail user should be thinking about, because some kind of ETH critics always talk about how this gets fragmented in terms of how much actually kind of trickles down to ETH layer 1. But how, I mean, when you talk about Robinhood, it's huge. And the idea of how much money could potentially be on chain if you're tokenizing stocks. And so, how should people think about the numbers as we look at this partnership?
Yeah, what I like to think about is just bringing more and more economic activity on chain. And you mentioned people who get worried about, what is the size of Ethereum's piece, of Arbitrum's piece, and how that works. And I think it's important to remember that, like, the pie is, we have to grow the pie and bring more and more on chain. And the example that I like to give is, like, if you create a new lane on a highway, or a new 3 or 4 or 5 lanes on a highway, they may not eventually be saturated, but we're creating capacity for the demand that will come over time. And that's what we did with Ethereum when we built the layer 2 roadmap. When we built Arbitrum, we created these new lanes that made it possible to do something like the launch of Robinhood and their expansion to 32 countries on Arbitrum, on Ethereum, on the blockchain. And I think people basically need to play the long game and understand we need to build the rails and build the infrastructure that can support the demand when it comes. Because if we didn't build that, if we had never scaled via layer 2, I don't know that we'd be able to support launches like we have today. Actually, I think we would not be able to do them, certainly at the scale and at the efficiency that we can do them in Arbitrum. So that's one thing, which is it's a very long game. But in terms of the sizing, I think the sky's the limit here. I always like to say, it's the meme that, how do you get the next billion developers on the blockchain? Everyone talks about that, but I do fundamentally think it's going to be through institutions, right? I can evangelize as many people as I can from today to tomorrow, every day. I'm not going to be able to hit a billion people and get them to natively come and onboard onto any blockchain, to be honest. But we have to
Hmm.
look at where are the users and where are the pockets of those users, and where do they exist in their existing product relationships, and how do we bring those products on chain, and by nature those users on chain too. And by the way, the reason I say, like, no blockchain is going to natively do that is because not every user wants to engage with the blockchain directly, and that's okay. And one of the beautiful things and the most exciting thing to me about this launch with Robinhood is it looks and feels exactly like it's inside the Robinhood app. It is the Robinhood app, and the experience in the EU looks and feels exactly like the US experience. At their event yesterday, they did a side by side showing the US trading experience and the EU trading experience. And unless had we not told you so, or had you not paid attention to that little pill on top that said token, you really wouldn't know that there was anything different going on here. And the idea is that this is something that can appeal to all users. You don't have to be a user that's technical, or want to
Hmm.
hold your own keys or custody, or want to deal with RPC servers. You can actually just go and use the Robinhood app the same way you would otherwise. And that's a very important moment for crypto. And I'm not trying, by the way, to say that there's no value of utilizing the blockchain directly. There's a ton of value. I'm a big believer in self sovereignty and self custody, but it's also in the optionality of self sovereignty and self custody. A user should be able to do that, and that's a fundamental guarantee. But many
Yeah.
users won't want to do that, won't be able to, and they now have the ability to use the blockchain really in an abstracted way without even knowing or caring that the blockchain and Arbitrum is acting beneath them.
Yeah, well, I think that's an important thing to consider here because, obviously tribalism runs rampant in crypto. And like the idea of if you're already in the space, certainly these things matter. And I'm not going to take anything away from kind of choosing Arbitrum or ETH versus another ecosystem. But it does seem that like the size of the prize is larger for off chain users in the world and bring them on chain, whether this might be their first kind of interaction. But I do want to play a little bit about this and kind of zoom out, Steven, just to think about what this win does mean, to turn the tables back to the tribes themselves, kind of what it means for the ETH ecosystem. Because for a while here, it did seem like Solana and maybe the non-ETH chains were stacking up some wins. We just chatted with Kyle Samani from Multicoin at Solana Accelerate, kind of talking about how Solana had been able to win some of these clients. I just want to play a little bit of what we heard from him and then ask you kind of what this signifies for maybe a pivot or a turning point here in this battle back and forth. Take a listen to what Kyle told us.
The reality is that the Ethereum guys just totally missed the mark. They didn't scale. Gas fees spiked through the roof. People got really pissed, and they said, okay, like, these guys don't care about my user experience. I'm going to go elsewhere. And Solana was really the primary beneficiary of that.
So, I mean, how big is this win for Arbitrum, for ETH fans out there, when you have a Robinhood saying, maybe with their actions and not just their words, maybe that's not the case?
I think it's the proof that we all needed that it's not the case. And there probably are others out there that shared that view, and definitely, I think a lot of credit to what Solana's done. They built a very good ecosystem, but ETH still has a lot of staying power to it, and it's very attractive to ETH and Arbitrum. Ethereum and Arbitrum are very attractive to teams that want to build on a robust and secure system. And of course, despite what you just showed, we did scale Ethereum. In fact, we followed the exact roadmap that we set out in 2020, that Vitalik set out in his October 2020 post for the roll-up centric roadmap that exists today. Robinhood is a perfect example of a massive fintech that's reaping the benefits of that roadmap and is able to launch their own Arbitrum chain secured by Ethereum, and it's going to power their core business in all of these new markets that they're entering. So I would say that clearly there's a lot of life left in ETH and Arbitrum, and people can be a bit tribalist, but at the end of the day, I think that Ethereum is here to stay, and I think will ultimately win the institutions because it is the most secure chain. And the Ethereum ecosystem and Arbitrum, of course, is a key part of that, is the best place for institutions to launch their products.
Yeah, well, I think that this now, and again, I do need to give credit because I think it really does seem kind of like a flagpole moment for kind of momentum shifting, or at least maybe the fairer question to you, Stephen, would be if this is happening now. Because from where I sat, and obviously, again, Coinage being a community-owned media outlet where people mint NFTs on Ethereum to co-own us and steer the DAO and everything we do here, I think it's we have a front row seat to kind of what goes on in the ETH world, and it just felt like people needed a win. And this seems to me to be that win that could say, look, this was the thesis. I think a lot of people lost hope in that thesis and why it actually happened. Maybe they didn't even understand that the reason why you need gas to come down is exactly what Kyle was just talking about. To win these institutions, it's got to be cheaper. Now it is, and now you have Robinhood building on Arbitrum. So I guess the question that I would ask now is, how much faster does this happen? And I know you guys probably only have insights into what's happening on Arbitrum, maybe. But I assume you're also in the market for other deals like this. I mean, how do you see this playing out now that this has happened and the signal it sends to those institutions?
Yeah, I think the more large players that come on chain and that choose Arbitrum and choose Ethereum, the better ultimately we do, and the faster and easier it will be for someone else. No one, what's the old saying? Like, no one ever got fired for choosing IBM, right? There's some natural ease when it comes to not being the first or the second or the third even to make a decision, but you make a decision that's considered de-risked and acceptable and just a good decision by the market. So I certainly think that people will look at all the recent wins in the Arbitrum ecosystem, which includes, by the way, of course, Robinhood. It includes the recent announcement of the Converge chain, which is Securitize and Athena launching their chain at Arbitrum. It includes existing chains like Yuga Labs, Bored Ape Yacht Club having their ape chain of the ecosystem, and there's 100 plus others chains in the ecosystem as well. And I think the more and more that you get of these wins, the easier it is for the next one to say, hey, that's clearly the right place for me to launch. And particularly when it comes to institutions, I think Robinhood's signal is going to be very important. So I don't think that this is going to be the last large institution that comes on chain, but certainly Robinhood, not surprisingly, is forward-looking and understands the power of the blockchain in a way that many other institutions really probably are just beginning to understand today.
Yeah, and I don't want to overlook kind of everything else that plays out here, because obviously selling to institutions and onboarding them is kind of one component of what's happening here. And we can get into what we just heard from Tom Lee, who just launched an ETH treasury company to go along with what we've seen play out from Ethereum co-founder Joe Lubin, who was also, by the way, just out in the Coinage studio just this past week as well, swung by and filled us in on things going over there at SharpLink. Always good to see Joe. But I guess, Stephen, when it comes to the users, still don't want to overlook the idea of having that be a component. You mentioned kind of other things you have going on in the Arbitrum ecosystem. I'd be remiss if I didn't overlook Hyperliquid as well, and the idea of Arbitrum's implementation in kind of how some of these other maybe non-institutional plays might be shaping up. I mean, how important do those remain in the idea of, I don't know, keeping Arbitrum top of mind? To me, it just seems like a very interesting blend of things that can be done to make sure that the decision makers are keeping Arbitrum or ETH top of mind and mixing those things together.
The remarkable thing about the Arbitrum ecosystem and the way that we've built the technology is that it's, in one word, customizable, and it's adaptable to really any use case and any business case. And you have teams and products and companies that are very, very, very different with very different goals that are all uniting around the Arbitrum stack to drive their core business. You have Robinhood, of course, launching their tokenized equities on their stock tokens and ETF tokens on Arbitrum One, but eventually on their own chain built on the Arbitrum Orbit stack. And you have, to give you some other examples, you have teams like Plume that are building institutional chains using the Arbitrum stack, and Kinto is another example of that. You have those that are building privacy into the Arbitrum stack, like Phoenix. You have those that are using the Arbitrum stack for their crypto native communities, like Azuki with Anime.com and the Bored Ape Yacht Club with ApeChain. And you have so many different types of projects. Some are the most crypto native projects around, right? You have Degen Chain, which is an L3 on Base that's using the Arbitrum stack to power their chain. And you have basically so many different projects. Some are L2, some are L3, some are L3s in different ecosystems, all uniting around the Arbitrum stack. And the reason for me, it comes back to that word of customizability. I don't believe, and this is actually a semi-controversial opinion in that it's a core differentiation point between us and our competitors. I don't believe that every blockchain should look the same. So we, in the Arbitrum ecosystem, we have a barbell strategy, if you will. We have this one neutral, really liquid blockchain called Arbitrum One. And then we have this Arbitrum Orbit stack. And, the nice thing is when I get into a room with someone, they say, hey, should I launch my own chain? I don't really have an incentive to tell them one way or the other because the Arbitrum ecosystem can serve them either way. In fact, Robinhood is a prime example where they're starting off on Arbitrum One and they'll eventually graduate to their own chain. And we don't have an incentive. I just want to hear what's best for the business. And fundamentally, what I always think is you should launch your own chain if there's a good reason to do that. And if you have your own product and distribution, then it makes a lot of sense. There are many good reasons that you want fee consistency, and there are many good reasons that why one would want to do that. But the nice thing is you can take the stack and you can actually customize it. So that means you can use custom gas token and choose what token your users pay fees in. You can use custom data availability. You can actually go deep and add privacy and institutional KYC or enforced royalties into the stack as well. And that's always been our core belief. We have neutral, highly liquid block space in Arbitrum One, and then we have the ability to launch your own chain here. But it doesn't make sense for teams to say, hey, I'm not going to launch my own chain that looks exactly like that one. I'm just slapping my brand in it. That doesn't actually, to me, make much sense. And that's why we have this dual strategy. And I think they're both important, right? And they're basically, there's no right answer. It depends on each product and each project that's building what is the right for them and what is right for them at that point in time. Because the nice thing is that in the Arbitrum ecosystem, it can mature with you. You can start off, Proof of Play is a good example. They're building Pirate Nation, a very successful game. They started off on the Arbitrum public chains, and now they've graduated. They actually have two of their own chains in the Arbitrum stack. And the idea is that the infrastructure is malleable and can be customized to exactly your needs, and no two projects will have the same needs, and probably no two products technology stack will look exactly the same.
Yeah, I'm kind of curious too, though, in terms of selling these things to, institutions. Robinhood, the idea of what that accrual looks like with that strategy in place, because I do think it is, it's a very interesting time for founders themselves to think about value accrual and what that looks like, right? Because now not only are we talking about Robinhood and what they want to do specifically with kind of tokenizing stocks, but also with the idea of the Arbitrum token, how that gets used, maybe if that shifted any of the use case or idea behind how value accrues to that token versus ETH. I mean, how do you think about this, you personally, Steven, in terms of kind of this new era we're in where crypto's not, I don't know, I want to say it was ever illegal in the US, but the idea of kind of letting people have ownership over things is certainly less scary. I mean, how do you think about value accrual if we are kind of in this night and day era?
Yeah, so much like yourself and Coinage, of course, Arbitrum is a DAO controlled and really community owned, and really in a very fundamental way. So all the fees that come into the network, right? So all the fees that Arbitrum collects, that's both the transaction fees, that's also the fees from Time Boost, which is the new MEV ordering system that we launched. about a month ago or a month and a half ago. These all go directly to the DAO, to the on-chain treasury of the DAO, right? It goes to a DAO-controlled wallet, which is unique because in most projects it goes to either a company wallet or a foundation wallet, but in Arbitrum it's all on-chain. It's all, and the way to get money out of that wallet is by a vote of the token holders, right? So all the fees go there. And when it comes to Orbit, so these other chains, so what does the value? How does the value accrue to the DAO? From there, it's actually a very similar story. So if you're launching an L3 on Arbitrum One, there are no explicit fees for that chain, and the reason is because naturally you're settling on Arbitrum One and you're paying settlement fees there. But if you're launching using the Arbitrum technology stack to launch an L3, an L2, say on Ethereum, or you're launching, say, an L3 on Base, which doesn't directly give fees to the Arbitrum DAO. So then the way that it works, the Arbitrum Orbit license works, is you give 10% of your profits to the Arbitrum DAO, 80% of which goes to DAO, on-chain DAO treasury, and 20% goes to fund development of the protocol with the developer guild. All this happens on chain. You can see exactly where the funds are going. You can track it, and that's why, naturally, there are basically, you can think of the DAO as having these core competency, which is the ability to sell block space, be that an Arbitrum One and the transaction fees there, but also via the Arbitrum Orbit stack. And it's built alignment with all of these projects. So whether you're an app on Arbitrum One or you're an Arbitrum Orbit chain, everybody's contributing back ultimately to the Arbitrum DAO in a very, very real and unique way. But the next step is, and then what does the DAO do with those tokens? We've seen some really, with those funds that it collects, that's where we start to see some real interesting innovation. Like, for example, the DAO recently launched the Arbitrum Gaming Ventures, a fund basically, not technically a fund, but operates like a fund that funds projects, takes positions and funds projects in the ecosystem, and the ultimate beneficiary of any gains that they see actually go back to the DAO and the DAO treasury. So building a very strong ecosystem where the DAO can not only have its core competency, which are very, very successful lines of business and revenue, but it can reinvest and grow in the business and diversify. And I think it's an extremely powerful concept that only really exists in the Arbitrum ecosystem today. And all of these wins, all of these new forms of adoption, whether they're new chains or they're new protocols that generate transaction fees in Arbitrum One, or they're new investments out of the Arbitrum gaming funds, all point directly right back to the DAO treasury. So really the key word there is sustainability.
Yeah, well, I mean, I think it's interesting to kind of think about how all of these things are structured, and certainly as we see more and more kind of treasury companies pop up, the idea of those versus kind of DAO structures. Obviously, I'm biased with Coinage being an on-chain co-op and what we've been able to do and advocate for, by the way, at the Crypto Task Force as well, because I do think kind of sometimes some of this gets lost in terms of trade-offs between being Web3 and not being Web3. But enough about me, Steven. This is an interview about you and what you guys have done. And I think, to get personal for a second, I mean, I imagine, building, I think the last time you and I spoke was a while ago, but the idea of building for this moment, as you said, this is kind of the moment that a lot of people have been chasing, is not just the idea of tokenized stocks and tokenized equities coming on chain, but the idea of you guys at Arbitrum and your team landing this one seems like the white whale of like Robinhood going up against Coinbase, obviously had not launched anything. And now for it to be on Arbitrum, I mean, what is that like for you personally? How much effort went into something like this?
Yeah, so it's extremely it's fantastic, and it continues to really be a source of excitement for the entire ecosystem, and myself, of course, included, to see these proofs of adoption. Right, we knew what we were building, we knew that it was powerful, but of course, seeing it actually be used to power such a real use case, and a fundamental financial application with a Web2 UX with a Web3 technology is really just absolutely fantastic to see. Of course, we support the Arbitrum Foundation in several ways. Technical and is one of them. So definitely, my team has played a big part in laying the ground and getting us this moment for sure. So really, I'm very grateful to all the incredible folks on my team for getting us here and getting the ecosystem to a place where we were able to power such an important application.
How do you follow it up? I mean, after you get one of these, I just feel like it becomes difficult, and kind of the the excitement is obviously there, but now it's like, I don't know, added pressure for it to kind of be like, okay, we got Robinhood. Now it's on to the next one. It's like, really on to the next one? But I imagine that's kind of, why you do it.
So I actually never, to me, it's never on to the next one, actually, right? So to me, the announcement is great, but that's day zero. Now, day one and day 100 is how do we make sure that this remains a success and is a success and will be a success? And that's working with the team, Robinhood or whoever the team in question is, to make sure that we're helping them reach their core goals, that they have the technology and the partnership and ecosystem support that they need. And that's, to me, is the ultimate success. I've always said that if you give me a deal that's like a big announcement today, but I don't think it's going to be successful in a year, like I don't want that deal, right? That's like, so to me, it's actually not about less about chasing, the new shiny next deal, but it's more about we have this incredible partnership with one of the best teams around, one of the best fintech teams around. How do we put everything into it and double down and triple down and make sure that it's going to be absolutely successful? And that's something we do for all of our partners as well. So yes, I'm sure there will be other deals and another institutions that come on chain via Arbitrum, and we're going to do the exact same there. But my focus is not actually saying, okay, how do I leverage this to get another shiny announcement? My focus is how do I make sure that this is going to be an absolutely smashing success, and do everything that we can on our part to make sure that the Robinhood team has all the tools that they need from us for this to, continue to blow past anyone's expectations.
Well, that is, I guess, kind of to wrap up here. I think that's kind of the interesting thing. Again, getting back to Web3 fundamentals and kind of the idea of institutions, permission systems versus what I think might be the next selling point of kind of how this all works. Because a lot of these things are walled gardens to start, but if you do have the nice luxury that is, of kind of having it exist in the ETH ecosystem, and you have Coinbase on Base and Robinhood over there on Arbitrum, I do wonder what that kind of starts to look like, because is it your kind of judgment that maybe some of these institutions are kind of adopting a crawl, walk, run approach of like, hey, we want to fully control everything? But how do you see things looking now that you've kind of gone through this process in terms of the push and shove when it comes to permissions on chain?
Yeah, so I think that ultimately we as a community, as a crypto community, have developed a lot. If you go back to like 2017 or even 2021 and like those cycles, there were a lot of people that wanted to put, and even institutions that wanted to associate themselves with the term blockchain. But ultimately, those generally looked like these private ledgers that were locked down, and they didn't provide the security. They basically provided all the negative UXs of a blockchain compared to a centralized system, but none of the positive security and UX benefits that a blockchain can provide. So a lot of them were actually, in my opinion, the worst of all possible worlds. But it was not not motivated necessarily by, hey, we actually understand the value here and want to use it. What we're seeing today is a completely new evolution of that. The fact that Robinhood is not just saying, hey, let's do something on the blockchain as a side gig and see what happens. Like, no. How do we, Vlad used the word rebuild, right? How do we actually think about this technology as the next evolution of financial technology that's going to eventually rebuild the core systems and do it on shared infrastructure? And that shared infrastructure is, of course, the blockchain. And Robinhood is a prime example, but I think this understanding generally has matured a lot in institutions. And institutions today are typically now, when we're talking to them saying, hey, they want to do something on chain, they really want to do it on chain. They want to do it on Arbitrum. They want to do it on Ethereum. They want to do it ultimately on a public blockchain. So I think that will become clearer over time. And of course, as the regulatory environment becomes clear, that's going to only help this as well, as people can, as institutions can have the guarantees and full clarity and understanding of how they can interact with the blockchain and how they can take their more legacy systems and upgrade them in a regulatory compliant way.
Yeah, and again, seeing the example now paved here of Robinhood doing so and doing so in the ETH ecosystem on Arbitrum, I think you have a lot of people excited now. But congrats again, Steven Goldfeder, co-founder at Off-Chain Labs. Appreciate you taking the time, man. Congrats again.
Thank you so much. Thanks for having me today.